In this video, I'm going to talk about what is a trading algorithm. Stay tuned. Hey traders, a very warm welcome to you. So, what is a trading algorithm? Well, this guy here that I've drawn is not a trading algorithm. This is a robot, a trading robot, which kind of is an algo, but let me explain exactly what it is. So, if you consider that a human trading, so you're at the screen now and you decide the market's going to go up, you move your mouse or your hotkey, whatever it may be, you enter the trade, done. That's just a human making the trade for you. In a nutshell, the algo is making that decision and executing that trade for you on your behalf, or for a company or for a bank or whatever it is on their behalf. So it's making the decision and making the execution automatically. So it's basically lines of code. You know, if you can imagine code, you've got lines and lines and lines and lines of code of if-then statements, of conditional statements, of logical statements. A basic example would be, you know, if let me think on top, but if cable pound US dollar goes down 100 pips, then buy 20 million every 10 pips it moves lower. I am just literally off the top of my head here, guys. Another one could be something like, hey, I want to execute, this is actually what one would be, I want to buy, let's go 10,000 contracts of crude oil, which is the CL code on NYMEX, and I want to buy that at the open. So this is where we get interesting. So you program that into the algo, and the algo said, okay, what do I do with that? Now it's been programmed, and maybe there's some different parameters in the algo. What the algo is going to do is it's going to say, listen, I want to buy that, but with the least amount of impact possible. You can't go in and just buy 10,000 lots of crude oil on the front month of the market. You're just going to obliterate the market. You need to be careful about it. So the algo would be programmed to say, you know, buy in batches of 100. Buy kind of 1,000 reasonably quickly in the first kind of 10 minutes, and then wait and see what the price has done, and then maybe buy another 1,000, and then wait, and you might have some boundaries in there that says don't buy above kind of $52.92 or whatever. If it goes below, you know, I don't know, $52.50, then be more aggressive and buy 200 at a clip. That kind of thing. So it's basically like a human who has written the code, and the code is allowing that algorithm, that trading robot, to make the trades on your behalf in the most efficient manner. So it's going to be very efficient at spotting this, trying to minimizing the market impact. And that's really the main reason that algos are out there. I'm going to talk about HFT in a second because that's slightly different. But the main reason people develop algorithms is to minimize market impact. I mean, if you want to buy 10,000 lots of crude oil, in the olden days, you would have had to work it, or find someone who you could trade with directly and pay a premium, or give it to someone to work. But fundamentally speaking, if you've got a size that's going to move the market, you need to be working that position in 100 lots, 10 lots, 5 lots, backing off when it gets a little bit too greedy, coming back. When someone comes on with a couple of 100 lots, being able to grab it straight away. So that's really what you're doing. You're trying to minimize the market impact. And if you think about stocks, for example, you're buying a lot of stock, you're selling a lot of stock for a pension fund or a portfolio or a hedge fund, that's exactly what you're going to have to do. You're going to have to work the order over time, and you're going to use an algorithm for that. So ultimately, that's what it is. Let me get my thing here, wipe off my guy. Another algo could be very simple, like just literally being always offering a market. So, you know, you've got your bid, you've got your ask, you know, your algos could be, okay, let's just say, you know, we're 100 bid, 101 offer. Let's say the algo says, I always want to be kind of 10 ticks away from the market in case someone flushes the market. So you have an order kind of here at 90 and have an order here at 111. And it would adjust as that price adjusts, it would adjust its position as well. And the idea being that if someone comes along and sweeps the market, and takes all that, it wants to be there to provide liquidity. That's a very simple algo. Okay, so now we've grasped the thing that it's just a robot kind of making the decisions for us, and we can program them ourselves, guys. You know, something like MT4, you can have a very basic algo. It could be something like, hey, when the stochastics gets overbought on a daily on these settings, on these markets, sell me X amount, or when the moving average crosses at this level, do this, or a combination of whatever it may be. So that's ultimately what we're doing. It's a computer making a decision for us that's been kind of program. Like, not to be confused with high frequency trading. You know, high frequency trading was a different kind of thing, and not to dive into it too much now. You probably find a better explanation anyway from somebody else who's far more into HFT than me. But in a nutshell, that was basically front running orders on the New York Stock Exchange or kind of the US exchanges. So when you placed an order in, they would see it more quicker than anyone else would see it, and they would decide whether they could do anything with the current price to manipulate that. So if you had say a market order to buy 1,000 shares coming in and there was 1,000 available, then they would probably, the HFT would buy those 1,000 at, let's say, in fact, let's do an example because it's going to help you much better than me trying to explain it. But this is kind of what would happen if I do it quickly enough for us. So we have, let's say we have the best offer here at $50.95, and the next level is 51.10, for example. Okay, that's your ask. In other words, that's the level, and you've got 1,000 shares sitting there, right? That's the kind of, imagine that's your level 2 screen. That's your ask. In other words, if you're buying 1,000 shares of this XYZ stock, this is the stock we're looking at here, you're going to get filled at 50.95. So HFT, what they would do is you put your market order to buy 1,000 shares. HFT would see that and go, whoa, 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 this guy's buying wants to buy 1,000 shares at market. And before the order would hit the exchange, they would buy those 50.95s and they would put an offer in at, this is an extreme example, that they come in here and they'd stick an offer in at 51.09, for example. So just the best offer, so just below that guy, and in a split second you've been filled at 51.09. The HFT guy has made the difference between 51.09 and 50.95 on 1,000 shares. Thank you very much indeed. Doing that on a really multiple time frames and adjusting spreads. And I mean, that's a very simplified example of that. That's ultimately what the high frequency traders were doing. And then just to move on one more step, we then had what's called predatory algos, which were kind of sniffing around for normal algos. So normal algos would be looking for liquidity and trying to work the order like that in 10,000 crude oil example. You'd have predatory algos, which would come in and try and put little bits of bait out and see if they could spot a big algo and think, oh, hang on, that guy's buying 10,000. That guy wants to buy 100. Oh, he wouldn't know the size, but that guy's a big buyer. Okay, I've got 5 or 6 big buyers here. Let me drive the price up, knowing that I've got a big weight behind me. So there's all sorts of games going on, guys. An algorithm can be the very simple kind of moving average crossover that you and I would program on MT4 on our laptop, going all the way up to kind of high frequency trading, predatory algo, dark pool, all that kind of stuff. If you're interested in that, there's loads of good content to check out. But otherwise, that's it. Hope you enjoyed it. Give it a thumbs up if you did. Comments below, always welcome. Don't forget to subscribe to this channel for more videos from myself and other traders if you haven't yet. Take care. Bye-bye.